Welcome back to the deep dive. Today we are really cutting through the noise on a pretty wild market event from last week. We're diving into a rumor that just completely shook the digital asset markets last Friday morning. And it was all aimed at Strategy, the company that used to be MicroStrategy.
The single biggest institutional holder of Bitcoin on the entire planet.
Exactly. A rumor just exploded, claiming this massive market-crashing sell-off. So our mission today is to unpack all of that. We're going to separate the panic, the noise, from the actual signal.
And figure out what the biggest buyer in the world is really doing.
Right. And if deep dives like this, where we verify claims and cut through all that chaos, are useful to you, please remember that engaging with us, subscribing, a comment, a share at all really helps boost our visibility. It lets us keep creating this kind of quality verified content for you.
It's true. And the source material for this one, it's almost like a movie script. It gives us this perfect play-by-play.
Have so.
You've got the rumor, then this. Immediate, fiery denial, and then the final sort of technical resolution. It's a great structure for us to look at not just what happened, but why it matters so much when these huge corporate treasuries are involved.
Okay, let's get right to it. The heart of the panic. Walk me through the exact rumor, because the details were, well, they were specific enough to do real damage, fast.
Oh, they were incredibly specific. That's what gives these things legs,
Yeah.
The claim started making the rounds early Friday morning. It was that Strategy had dumped a massive chunk of their Bitcoin.
And there was a number attached to it.
Yes, 47,000 BTC, to be exact. And the rumor was that this was flagged by on-chain alerts showing their total holdings dropping from around 484,000 down to 437,000 BTC.
Wow. And this didn't just happen in a vacuum. The market was already bleeding, right? What was the context here?
The context is absolutely everything. I mean, at the time this thing landed, Bitcoin was already in a sharp, painful correction.
We'd seen that big drop from the highs.
A massive pullback, yeah. From around $68,000 down to about $53,000. It was a moment of just extreme weakness. And what's more, this lined up with one of the biggest ETF outflow days in recent memory. We saw an $869 million spike in outflows.
So retail was already panicking?
Retail was panicking, there were huge liquidations, and then you hear a rumor that the biggest buyer on Earth, Strategy, is suddenly dumping 47,000 coins. That fear it goes critical. It turns into an emergency.
So the reaction from Michael Saylor, the CEO, had to be quick. How fast did he respond?
Instantly. He gave it zero room to breathe. His first statement was just a flat-out rejection. There is no truth to this rumor. Simple as that.
But he didn't stop there.
Oh, no. Then he did the classic Saylor move. He went on CNBC and just doubled down. Hard.
He didn't just deny it.
He promised the exact opposite. He said, and I'm quoting here, we're buying quite a lot, actually. People will be pleasantly surprised on Monday morning.
That is such a theatrical move. It's designed to just completely reverse sentiment on its own. And what about that meme he posted? The AI-generated one of him floating calmly while the Titanic sinks behind him.
Right.
I mean, did that actually help? Or did it just add to the chaos when the market needed clear facts?
That's the million-dollar question, isn't it? The sources called it classic Saylor chaos meme energy. And look, it definitely dominated the conversation.
For sure.
But it also muddied the waters. Instead of a simple, boring denial, he wrapped it in this layer of mockery and drama. It worked for his hardcore followers. It signaled confidence. But for a massive institutional player, you have to wonder if that's the right move in a crisis.
Yeah, if clear communication is the goal. So let's shift away from the chaos and get to the verifiable facts. What did the on-chain data actually show?
The resolution here is, well, it's definitive, and it's simple.
Which is?
No BTC was sold. Zero. The whole thing was a massive misinterpretation.
Okay, so what happened?
Arkham, the firm that was cited in the rumor, they clarified it pretty quickly. The big movements people saw on-chain, they were just routine transfers.
Routine transfers.
Exactly. I mean, think about it. Strategy holds over $60 billion in Bitcoin. They are constantly moving assets around, rotating wallets, changing custodians. It's all just standard high-level security protocol.
So explain that distinction again, because that's the core technical point.
Right. It's crucial. When a company moves Bitcoin from one wallet they control to another wallet they control, that's a transfer. It's an internal movement.
But on the blockchain, it looks like a big transaction.
It looks exactly like a transaction that could be leading up to a sale. But the destination address is still theirs. So automated tools or analysts who aren't careful, they see this massive movement and just scream selling. And that's how the rumor started.
And if you just check the official paperwork, the SEC filings,
Yeah.
the whole thing just falls apart.
Completely dissolves. We looked at the official SEC filing from November 10th. It confirmed their real holding, 641,692 BTC.
Not only were they not selling,
They were buying. The filing confirmed recent purchases of 487 BTC for nearly $50 million. And on top of that, analysts at TD Cowen are estimating another, 6,700 BTC are about to come in from their latest stock raise?
so it's the exact opposite. We're accelerating, not selling.
The exact opposite.
Let's connect this to the bigger picture then. Why is Saylor's strategy of buying the dip? Why is that such a critical market signal right now?
Because this is his playbook. We've seen it since 2020. When Bitcoin falls, when the ETFs are bleeding, when retail is just paralyzed with fear, he sees that as a discount.
I bias harder.
He buys harder into the fear. The fact that they're actively raising new capital to buy more BTC while the price is down over 20%, that signals immense institutional conviction.
Yeah.
And you have to remember the scale here. This is the largest corporate Bitcoin treasury in human history, over $60 billion. If they actually decide to sell 47,000 coins, the market would just dip.
It would crater.
It would crater instantly. The fact that it didn't is almost immediate proof the rumor was false.
That's a really interesting point from the source material, that these kinds of rumors, the big whale is selling, they almost always seem to pop up right at the bottom.
Right at the point of maximum fear.
It's like it's designed to shake out the last weak hand.
It's a classic shakeout mechanism, yeah. The fear index is maxed out, and people just latch on to the worst possible story they can imagine. And what's worse than the biggest buyer becoming the biggest seller?
Right. So let's turn to the crypto robot analysis that one of the sources mentioned. They laid out scenarios for Monday morning based on Saylor's promise.
Yes, because now everyone is waiting for the official filing that proves how much he actually bought when he said they were buying quite a lot.
And the analysis breaks it down into two main scenarios.
That's right. Scenario one is the moderate buy. If strategy comes out and confirms they bought somewhere between, say, 5 and 10,000 BTC.
What happens then?
Market sentiment flips instantly, from fear to bullish. ETF inflows would probably return pretty quick, and that $53,000 level would basically be confirmed as the bottom for this whole correction.
Okay. In scenario two?
Scenario two is the monster buy. If they really want to shock everyone and announce a purchase of like 20,000 BTC or more, then you can expect a full reversal.
A V-shaped recovery.
V-shape, yeah. You'd see BTC spike 10, maybe 15% very quickly. All the fear would just evaporate. And that whole bear market narrative that was starting to creep in would be dead by Tuesday.
And announcing a monster buy right after the world thought they sold. I mean, that is just peak Saylor.
It's the ultimate theatrical move.
So the takeaway for you listening to this is that understanding the difference, the real difference between an on-chain transfer and an actual sale, and knowing where to look for the official SEC filings, that's your defense. That's your shield against this kind of viral panic. That really sums it up perfectly. The lesson here is that when you're dealing with these massive institutional players, you have to look beyond the viral tweets. You need verified documentation, especially when it's about something as routine as just moving coins around for security.
And it leaves us with a really interesting question for you to think about this week. Strategy's whole accumulation model. It relies on constantly raising capital by issuing stock or debt to buy more Bitcoin.
Right.
Given that they're speeding this up during a major pullback, does this model represent a permanent fundamental change in how corporate treasuries might work in the future? Using old-school finance tools to constantly accumulate a new-school asset, no matter what the short-term volatility looks like, something to mull over.
Always leaving us with homework. Thank you for diving deep with us. We'll catch you on the next one.